Hello there, Mavericks. This is Rob Reinhold, and this is the Trading Room, and we have just wrapped up November's monthly options exercision, so we've got basically one more full month of options trading before the end of the year. In this session, we're going to be talking about the news of the week. We're going to take a look at the broad markets, the commodity markets, and then as always, we score all the sectors from +3 to -3, and then we look inside those sectors to find the best opportunities.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's get ready for the week.
Let's start with the news of last week. All right, so 2 weeks ago, we had the election, and we all know what happened. The Trump victory, the markets raced higher and just ran and ran and ran. Well, just like any party, at some point, it gets too late, people get too drunk, and at some point, you get a little hungover, where there is a lack of energy, a lack of enthusiasm, there's maybe even a little bit of barf on the floor. But the first 3 days, we had just a reasonable pullback. Monday, Tuesday, and Wednesday. It was just a reasonable pullback. And then it really intensified on Thursday and Friday. And a couple things happened that intensified it that I do want to spend a little bit of time on. On Friday, we got some testimony from Chairman Powell saying, hey, we may have to cut rates slower than expected. They did not come out here and say it explicitly, but we've heard a lot of talk about potential tariffs and how tariffs could drive prices higher. And I think the Fed is going to be quite reticent to cut rates aggressively if President Trump is still planning on implementing his sweeping tariffs on all of our trading partners and especially on China. Also this week, we got some appointments to some government positions, and the market didn't like one of them. And that was the appointment for the Health and Human Services, Robert F. Kennedy Jr. And look, I don't want to be controversial here. I'm just going to state what the market did. Robert Kennedy is pretty anti-vaccine and also very anti-packaged foods. He likes the idea of fresh foods and healthier people, which, again, I think we can all support. But remember, this is corporate America. Corporate America has made money on lots of biotech, lots of pharmaceuticals, and lots of prepackaged food. So these sectors got hit, and the healthcare sector was down 5.5% on the week on this news. So there are definitely some things happening that are sobering the market up a little bit. And that's why going into this week, we're going to talk about where the market is. I think the market is in a pretty tough situation here. The charts are still bullish, but I feel like sentiment has possibly turned. We are going to trade the charts. That's what we've always done here. But we also can't be blind to sentiment. So let's take a look at some of the news that happened last week. We got the CPI report on Wednesday, and the CPI report was a good report. It was as expected, in line. So now we've got year-over-year CPI at 2.6%. So that was good news. The markets did not go up on this news. The markets, they didn't go down either, but it just, I think Tuesday the market was down like 0.2, 0.3%. But this was really good news, and that just shows you, again, the election hangover. We'd already spent a lot of capital racing these markets up substantially. This news just kind of fell on deaf ears. And then the next morning, we got the PPI that came in line. So again, inflation's looking good. Inflation's looking great. And then on Friday, we got retail sales. Retail sales looked pretty good. They beat the headline number a little bit off on the retail sales for core, but the September numbers were revised up very strongly. So again, a stronger revision to September's numbers. Overall, again, these are all decent numbers. Again, lower inflation, good growth. And then take a look at this report on Friday. The Empire State Manufacturing Index coming in at 31.2. It's been maybe a decade or two since I've seen that number this high. That's a very strong number. So there are reasons to still think the economy's good. Inflation's coming down. But I think people are a little bit worried about what the potential effects of higher tariffs are going to be, the potential effects of lower government spending. Remember, when you cut government spending, you're cutting GDP. That is money that's going into the markets. Like I said, we're just having a pullback right now. That's all we're having. But I think we have to be a little bit more open to just trade, instead of just trading technicals, to also consider some of the sentiment that's happening. And as I said, it was a normal pullback until Thursday or Friday. And then we got really hammered here. We got the Dow down, S&P down 2%, Qs and Russell down between 3 and 4%, oil down, gold down huge. So there were some pretty big sell-offs. Pretty much the only asset class that did not sell off this week was the cryptocurrencies. And Bitcoin had a monster run this week, all the way up to a high of 93,000. That's an all-time high, beating the last high of 73,000. So that was one asset class that just looked great. But everything else kind of sunk. And like I said, I really want to focus on these charts because the first 3 days were pretty normal. We got this big momentum jump. Again, this is huge momentum. And I'm using the term momentum on purpose because I feel like when you get a car going really fast, even when you take off the gas, there's still a couple days that it carries. And you can see Monday, Tuesday, Wednesday, these were perfectly fine candles. And I even said, I think we're probably going to base here. If we do pull back, we're going to pull back. And I said to this 58.70, this is going to be the area where there should be some support on Thursday and Friday. And what that's telling me, again, we had this big momentum, big expanded range candles, opening at the high, closing at the lows, or on these ones, opening at the highs and closing at the lows. I feel like we're going to have a little bit of carry through. So I am looking for the S&P to break that 20-day moving average and head on down to this next level of support, which is also going to be where this 50-period moving average meets. So I'm looking for a little bit more weakness here. If you want to understand a little bit more of why I'm looking at this, we come over here to the Qs, and you can see the Qs have already broke. The Qs broke through pretty substantially with some pretty good volume. So I'm just looking at this and I'm thinking, okay, we've got another stop probably lower here, somewhere around 489.50 on the Qs. I do think we have a little bit more downside left, and then we'll see what happens at those 50-day moving averages. We could have a nice bounce off there. We are now going to be into the holiday week of Thanksgiving. That week traditionally has a bullish bias, so it would not surprise me at all to have a week this week that the markets come down and touch the 50-day moving average, maybe pierce through it, and then possibly a little bounce back up through the Thanksgiving holiday. But then I think that bounce better be a pretty good bounce because we could hit some overhead resistance up here at the prior resistance. Look, I am not saying let's all get bearish. All I'm saying is when you get these real serious moves with velocity, and not just that, but if you take a look at Friday's candle, it was down all day long. It was selling and selling and selling and selling. A little bit of a bounce back at the close, but just this was intense selling all day long. You usually need a real panic freak out, spike down before you can find a bottom. I just don't think we've found one yet. Looking at the heat map, the one thing that pops out to me is there's some big green here in financials. Financials look great. It was a up sector for the week. And the consumer. The consumer also looked actually pretty good for the week. What didn't look good? Technology, tech, and look at this healthcare and biotech. They got absolutely creamed here. Just absolutely creamed on that appointment news. So let's talk about next week. We've got support. So S&P is at the 20-day moving average. The Nasdaq's already broken through it. I'm saying with that velocity, I think there's more downside. I'm not calling for the end of this bullish market move. That will be called if and when the 50-day moving average is broken. It breaks below it, and then it bounces up and can't get back above the 50-day moving average. That will be when I go to a more bearish stance. Until then, I'm basically just kind of lightening up a little bit and saying I don't really know what's happening at the moment. It's a little bit mixed. Why don't I just play a more neutral hand until I know more? The aftermath of the election. I feel like we got that real good jump. And again, that jump came off of, very encouraging things like lower regulations, lower taxes, things that Wall Street just loves. But I think now we're starting to get the implementation of some of the policies. I think the market might start looking at this as a mixed bag instead of just a bullish ones. One of the things to watch is the US dollar and the government bonds. Throughout this entire time, the bonds have been creeping higher, creeping higher, creeping higher. They are creeping higher in anticipation of a less aggressive Fed, which we just heard Powell say, expect that. So I don't think interest rates are going to go down. If interest rates do go down, it's because the market crashed. And then that's going to be good for interest rates. But if this market holds up, I think interest rates are likely either going to stay here or head higher. This week, we do not have many economic reports whatsoever. I mean, as you can see here, we've got some manufacturing numbers at the Philly Fed. Flash manufacturing is not that big of a number. So this week, again, this is the week of had the election. Everyone loves all the positive things that are going to come. This is the week that everyone starts to worry about, okay, how is it actually going to be implemented? I think we're still in this. Again, there's not a lot of other information for traders and investors to stew about. Again, I just think we're going to see a little bit more selling here. So I'm going down to a +1. We are at the 20-day moving average. That slope of the 20-day moving average is now flat, but we are above the 50. Now remember, the way this works is a 0 doesn't mean that it's going nowhere. And I've said this before. If you have a 0 in your score, it's not like, oh, it's flat and hasn't gone anywhere for a while. Now that could be the case, but a 0 is also a stopover on the way to another score. So again, if there was a market that was a +3, when it weakens, it goes to a +2, a +1, a 0, a -1, -2, -3. Again, we'll see what happens here. Right now, you still have to be mildly bullish. That's just what the technicals are telling you to do, and that is actually where we are sitting here at the moment, mildly bullish. If we continue to weaken, then of course this score will continue to go down and we will make some adjustments from there. Let's go ahead and take a look at sectors. We didn't get a ton of sector movement here, but what we did see is that if something did move, it weakened.
Have you been trading in the markets for at least 2 years? Are you starting to see some decent progress? Is that progress so small because of your limited account size? Maverick Trading is a prop firm that provides capital to profitable traders. You trade a minimum $25,000 account and keep 70 to 80% of the profits. After 2 consecutive profitable months, you move to a $50,000 account. As you keep progressing, you will be able to trade 6- and 7-figure accounts. To learn more about trading for Maverick Trading, either click on the Apply card in the top left, click Apply at the end screen, or click the link in the description to watch our recruiting video that explains more about Maverick and prop trading. If you like what you see, apply for a position and meet with our recruiters. Are you our next trader?
Let's take a look at the final numbers here. As I mentioned, financials were an up sector this week. That's a really big deal in a week that the S&P loses 10%. So financials, people love financials at the moment. People are looking at the President Trump's new initiatives, and they're determining that financials are actually going to be helped. They're also looking at energy, saying, hey, you know what? Energy is going to be helped. And then they're looking at places like healthcare. And all of a sudden, that is where the pain was this week. Also, technology materials. Materials was mostly from the fall in metals, in gold specifically, and technology was from the applied materials miss in earnings. We saw a lot of selling in the semiconductors. So again, these results kind of tell us where the market is optimistic with the new president and where it's pessimistic with the new president. Let's go in and start to score these from +3 to 0.3. All right, last week, utilities were a -1. We're a -1. Basically flat on the week. We're still trading below moving averages, so it's mildly bearish. If someone said, I would think this is more of a zero, I would not argue with you whatsoever. Over here next to communication services, I want to point out Thursday's candle. Thursday's candle, the market was down pretty big Thursday, and it hardly was down whatsoever, trading like at all-time highs here. But we did get hit on Friday, so okay, it's going to come down. It's going to come down. It's still solidly above the 20, above the 50, and these lines are still sloping higher. This still maintains a +3. I'm not looking to buy it on Monday, but if we do find a bottom here this week, this is a sector that I really do want to increase bullish exposure on. Next up, real estate. Real estate was weak, was a -1 last week, and this week it has weakened to a -2. So we're starting to see some weakening here in real estate. And here is just the real disaster of the week. So as I mentioned earlier, this is a direct effect of the new presidential appointees. And just take a look at stuff like the biotech index. Like, look at this biotech index. It just got hammered. And other stocks, like in the insurance field, one of the other worries is that the Obamacare or the Affordable Care Act is going to be struck down. And if that's being taken away, remember, that was a way for people with pre-existing conditions to get insurance that didn't work for a company. Without the Affordable Care Act, insurance was tied to employment. And if your employer didn't offer you insurance, it was very, very expensive and you would get denied all the time. Trust me, I know as a trader, before we had pre-existing conditions covered, that if you had pre-existing conditions, you did not get insurance. You just risked it. So that is also in danger of being taken away. Remember, a lot of people got on insurance programs, and if that goes away, those people are no longer paying premiums to these companies. So this is a clear -3. Yes, there could be a bounce because anytime something gets hammered like this, there could be bounces. But you definitely want to be looking at being more short than long here in healthcare. Next up to industrials was a +3, and we're going to weaken that to a +2. It's gotten pretty darn close to that moving average, and you can see it is flattened out here. We're at a +2 on industrial. Still looks okay, still looks good, but take a look at the difference between this week compared to communication services. Remember, comm services only went down on Friday. This went down all week. So we're just going to reduce our score a little bit here on this one. And then over here, look at financials. Holy cow. We closed pretty much on, well, probably Monday was the higher close, but we basically closed close to the all-time high on this in spite of this nasty, nasty day on Friday. This remains a +3. This remains the strongest sector out there, bar none. Next up is the consumer. Okay, pullback, same thing. We got four down candles, 3 down candles. But you can see it had a pullback. Everything is still very, very bullish on this chart. Technology went from a +1 to a 0. You can see big selling here, especially on Friday. Big selling. We're now between moving averages. That always gets a 0 score. Here we are in the material sector. It was a 0 last week. It has moved to a -2. It didn't even have a positive day on Monday when most other sectors did. Tuesday got hammered. Wednesday held in there. Thursday, Friday got hammered more. Very bearish price action. Now look, whenever you see a move like this, expect a rally or a base. I don't think it's time to go shorting right here, right now in this sector, but on any bounces or bases, I think it's a great setup here in the material sector. And then we come over here to energy, and energy put together an up week during a week that the price of oil went down 4.5%. Think about that. So the price of oil goes down 4.5%. We're now at $66 a barrel. Energy stocks are going up. If you look inside the energy sector, not all the stocks are going up. The stocks that are growing up substantially are the pipelines. The pipeline stocks are doing very, very well. And that's where you want to be looking inside of this sector. And I actually have a pipeline trade here for you in just a second. That's a +2. So this is where we were. Industrials weakened a little bit. Energy strengthened. So we got 2 +2s now. And then everything that was weak, it just weakened more. So now we have healthcare at a -3, real estate, materials at -2s, utilities at -1, technology at a 0. The haves and the have-nots. There's no question where the strength in the market is right here, right now, and there's no question where the weakness is. A lot of these sectors, specifically real estate, utilities, and some healthcare, are very sensitive to interest rates going higher. This is a sign that they kind of think interest rates are going to continue to go higher since these sectors are under a little bit of pressure. All right, so let's go look and see where our trades are right here, right now. We just take a look at the sectors, and then we'll go ahead and look for some new trades. All right, everything in our red is a position that rolled off this week. We actually had 5 positions roll off. We had 4 winners, 1 loser, 2 for max gain, 1 for max loss, and 2 for a moderate gain. So as far as the trades that rolled off, it was a nice little batch. And you can see that just leaves us with 4 trades on, leaning a little bit bullish. If we go check on the market, we're at a market score of 1. So that means that these are the slots available. These are the slots. Let's go take a look at where we can add. The ones in black, these are trades that are already on. So you can see we already have 2 plus 2s. We have 1 plus 1 and a 0. So we're going to be trying to add this out. But remember, you do get some discretion here when using the trade slots, is that I'm using some discretion here to even it out, to level it out, to say, okay, you know what? I like my trades in financials. I like my trades in consumer and industrials. But in case this market keeps going down, I sure would like to have some shorts working in some of the weaker sectors. So we're going to be adding utilities, real estate as a -1, healthcare as a -2. And then we'll add a technology at a 0. And I want to, for the first time in a long time, I cannot remember the last time we went bullish in the energy sector, but here it is, a +1 in energy. So let's go ahead and look at some of those possible trade setups. First off, utilities. Now remember, utilities is a weaker sector. It's a -1. So we don't want to get too crazy on this. And I got to say, I really kind of struggled in this sector. My least favorite time to look for new trades is right after monthly options exercision. Why? It's because there are 3 sectors that are very difficult to find trades in: utilities, real estate, and materials. There are not that many stocks in these sectors, and there are not this many stocks in those sectors that have weekly options. So right here, November just closed. I would have to go all the way out to December. That is 5 weeks in this period. Sometimes it's 4 weeks. This time it's 5 weeks. That trade is too long for me. I do not do well making trades like that. So I looked around, and all of my favorite setups did not have monthly options. This is the only one that had monthly options. Now, you have to decide as a trader. You know, I was forced into this one. I don't love the chart, but I like it enough that I do think this is a valuable addition for some bears inside of the utility sector. This stock has had a huge run, and this stock is in nuclear power. So nuclear power, obviously the Trump administration is going to be much more friendly towards nuclear power. And you can see we've gone from 7 to 27. So 7 to 27. Now again, we've gone there through an uptrend. It's been uptrending the whole time. All of a sudden right here, hit a little bit of resistance, did not make a new high. And you can see we have now broken down for a new low. Now look, this is technically a double top. I'm not a huge fan of double top formations. I know some people love them. I'm just not. But when they do break the neckline, and this is the neckline right here, when they break the neckline, they can be a decent short. I am not calling for this thing to return back down to the single digits. Again, I'm doing a -1 trade. So the -1 trade I'm looking to do is the 1915-18 bear put spread. So I'm looking to play this from 1950 down to 18. I mean, you can see here, I'm just calling that it closes below 18. That is the trade. Now look, if you do want to get more bearish on this, because I do think this could have a fall, you could get a little bit more aggressive to get some more delta, and that would be the 1850-17. So now you're playing it all the way down to this area. As you can see, this thing is a big mover, so there's likely to be a big move one way or the other on this stock here. That is OCLO. I've never played it before, OCLO, but again, it's going to be my first time. Next up is real estate. We wanted to add in -1 in real estate. This was another one. I found lots of setups I liked, but nothing that had weekly options. When I looked in this sector, I found lots of good setups, and I was not able to find one with weekly options. So you know what? I do want to get in this sector. I want to get short this sector. I'm going to be looking at this one for a little bit longer here. The December 20th 75.70 bear put spread. And you can see this stock. If you go back in history, this is a low base from about a 4-month downtrend before it. And you can see we have now clearly broken down below that. Where are we headed? We could be headed lower, but again, I'm not looking to be ultra bearish here yet. This is a -1 trade, so I'm looking at simply the 75.70. So basically, if it's below 70, I'm going to make about $2. If it runs and goes above 75, I'm going to lose $3. That's the trade. That is a very, very mild trade in a sector that is at a -2. All right, let's move in next into the worst sector, healthcare. All right, so healthcare, there's 2 areas that are really getting hit in healthcare. Number 1 is biotechnology, and number 2 are the insurance plan providers, especially the ones that have been participating in the Affordable Care Act. They're looking at losing potential customers that they've had for years. So here is the setup you can see here. Nothing but a downtrend. This thing has been downtrending for a long time. And frankly, look, when the market had a rally on election night, it didn't rally. It did not rally. This has known that the new president is not going to be good for it since the election. There has been no relief rally or anything. And frankly, you can see we have broken down and now we're doing some low basing action here. I want to be at a -2, so I want to get some positive delta on this one, some negative delta on this one. So I'm looking out to go to the November 29th, 58.55. So basically, buying the 58, selling the 55. I think it's going to be below 55 in 2 weeks. If you want to be a little bit less bearish, look at like a 57.59. 57.59, that's not a big call whatsoever here on this one. Moving next into tech, where we want it to be a 0. I talked about this one on my video on Tuesday, and I talked about doing I think it was a 400, 420, 440 butterfly. We're going to narrow that down a bit here. Now, the fact that I'm a little bit more bearish than bullish, and I really kind of struggled on this one back and forth, because usually if that's the case, then I'll want to pick a strike price lower than the current price. So right now, the stock closed exactly at 415. Originally, I was looking at something like a 400, 410, 420. That was the original butterfly I was looking at, so it would be slightly targeted. But then I just looked at this support line down here, and I just said, okay, that's a pretty substantial support line on Microsoft. You know, yes, maybe things have changed a little bit since the election, but I don't think they've changed too much. So I decided ultimately I'm going to stick with where the stock is here. The 415 will be the midpoint. So I'll be looking to do the 400, 415, 430 butterfly. And you can see this is a true neutral trade. The profit area on this one's probably about, 406 to 424. Probably anywhere in that area is a profit here on Microsoft. So as far as time goes, I'm going to go out 2 weeks. 2 weeks. And for that holiday week, understand that positive theta trades get a little bit of a bonus because of Thanksgiving. The market is closed, but you still get theta decay. And then on Friday, the market closes early at 1 p.m., so you get a little bit more theta decay. So I do like doing positive theta trades into these holiday weeks where the markets are going to be closed, but you still get the theta decay because of it. So that is a butterfly on Microsoft. And last is energy. Energy has done, again, I can't say the whole sector has done well because if you look at some of the stocks, they're not doing well. Anything that's really tied to the price of oil is not doing well. And I think we can all take a look at what has happened here and say, okay, the price of oil is likely probably going to go lower under a Trump administration than under a Biden or a Harris administration. This is Energy Transfer Partners, ET. They are pipelines. So pipelines, the question is if there's more pipelines being built and used, which is definitely something that the Trump administration wants to do, then that's bullish. And you can see there was a good reaction from the election. There was a very good reaction from the election, and we got a pullback. So we got a pullback, we found some support, and then this candle on a day where oil was down for quite a bit, we got this nice candle here. I definitely want to be bullish. This is a nice bull pullback. Take a look at the scaling. This thing is not a fast mover. So we've got basically 17, 18. Luckily, this stock is volatile. Sorry, not volatile, but has enough volume to where there are 50-cent strikes. So with 50-cent strikes, it gives us the ability to really play some trades around what we want to do. I want to be at +1. So at a +1, I'm going to be doing the November 29th, 1650, 1750 bull call spread. If you want to be more of a +2, you could go all the way out to that December 1718 bull call spread. And again, that would have a trade. That trade has like a 2-to-1 risk reward ratio on it. But for me, I'm doing 1750, 1650. So I just need this to close above 1750 in 2 weeks, and that will be a max gain. Again, getting about 40% of the spread. All right, let's go ahead and wrap this up. These markets are key resistance levels. I am definitely a little worried of the velocity we've seen, and not just the velocity, but the lack of bouncing on Friday. Kind of tells me that, okay, all that money that came into the market, I don't know if there's anything behind it. Is there money behind that big flow we saw in the market? It didn't look like it the last 2 days. It tells me that either there's not money behind it, or people are being a little bit cautious on when they're going back into pullbacks, which tells me we probably have more pullbacks to go until we get to prices where people say, okay, that's cheap enough, I'm willing to go back in it. The 50-day moving averages are absolutely key. If they hold and we can get a decent bounce off those, you know what? That's a good sign for bulls. We'll take a look at that next week going into the holiday week. And if we can get back above some resistance points, then I think we have to go back to a more bullish stance. But if we break below those 50s, and again, we retest that 50 and it fails, then of course we're going to have to go bearish at that point. Remember, we just had this election. Half of America's happy, half of America's sad. Guess what? It was going to be that way whoever won. As far as a trader goes, who cares? It doesn't matter who won as a trader. All that matters is, are you going to be on the right side of the move? If you were bullish after the election, you were on the right side of the move and you did really well. If you're bearish, it stung. Here we are 2 weeks later. Who cares who won? It's irrelevant as a trader. Where's it going to go from here? If we break those 50-day moving averages, I'll go short, regardless of what president I wanted there to be. It doesn't matter. It's irrelevant. You need to do the same thing. Argue politics with your friends, with your family, whatever. I don't care. But as a trader, you just need to be on the right side of the trade. Check that bias at the door. So I think you have to wait until a successful defense of the 50 MA before you add on more bullishness. I think this market possibly turned. Again, I shared with you a lot of the reasons why I think that, but I'm not ready to make that definitive yet. And as always, sectors, if you don't know what's going to happen with the general market, then fine. Just say, throw your hands up in the air and say, I have no idea what's going to happen with the general market. But you know what I do know? I know healthcare is in trouble. I know the financials seems to not care whatsoever what's going on. Use sector analysis to really help strengthen your trading if you don't know what the overall market is going to do. That is the Trading Room. Thank you for joining me. Everyone have a great weekend. Goodbye, everybody.